Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the trading opportunities in USDJPY, which is showing bearish momentum of late. And if it continues that way, I think a move towards 109 is on cards for the remaining days of this week. But at the start of the day, it was a different story. The day and so the week started on a bullish note for USD GPY. We saw buying momentum building up from the Asian trading session. European trading session, in which the USD GPY seldom moves, also saw gains which pushed it above 110. After that, it's been a different story. It failed to sustain above 110, and now if it continues to consolidate below 110 level, I think a strong case can be made for a sustained bearish move towards 109 in the remaining trading sessions of this week. On the data slate, we have had flash PMI releases for major European economies. For the US also, we got the market manufacturing and the services sector PMI data. For US, it is not given much importance, but we will consider the numbers which we have got. Now, let's consider the PMI data for European trading hours. France and Germany saw the flash PMI for manufacturing and services pointing to strong expansion in both the economies. This strong performance in these two countries has majorly contributed to the euro area numbers also showing up robust growth in both the segments of economy. Euro area manufacturing PMI is at 61.5. This is a flash estimate which is lower compared to the prior month's numbers, that is the numbers for July. That only means some moderation is happening in stronger than usual pace of expansion of last 6 months. 6 months. Supply chains constraint and labor shortages are also having negative impact on ongoing recovery from pandemic lows. Services PMI is little changed at 59.7 for the month of August. The UK manufacturing sector expansion remains equally strong as last month, while only slight decrease is being seen in the services PMI, which has dropped to 55.5, which is lower compared to the prior month. And this is happening amidst the less favorable demand condition. For the United States, the market PMI data was also released, and here we have the PMI at 61.1, while the services PMI is significantly lower at 55.2 for the month of August. And this significant decline has also contributed to the softening of US dollar after the release of these PMI numbers. Now let's shift our focus to the technical segment where we will consider the USD JPY first. After that, we will also consider the trading opportunities in Dow Jones Industrial Average. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and this chart I made while USD/JPY was still above 110. Now it has declined towards 109.8, and of course it will look a lot different. But here we have this formation where the USD/JPY is in a consolidation phase where the upper price limit at around 110.7, while on the lower side it has been finding support on the 109 level. And after this strong decline and consolidation in this narrow range, I think if it is not really able to sustain above 110, then that shows the weakness in USD/JPY, and we can start looking for exploiting the sentiments on bearish side. We can go for scalping as well as swing trades in USD/JPY. For that, we can utilize the lower time frame formation. Here on the pivot point series, we have strong resistance in place at around 110.10 level. This is the central pivot point and it has kept the gains of USDJPY on the higher side. Today also we saw the reversal in USDJPY happening after it went on to touch this central pivot point, and after that it has gone on to decline towards 109.8. The regression curve has also almost flattened, and it looks likely that we will see more of the price action in this lower band. And in course of time, as the title suggests, we are expecting a move towards 109. To optimize the entry and exit points, we can utilize this convergence of the SMAs. These three SMAs, the 50, 100, and 200 SMA, are converging closer to 110 level, and I think if we have the break below this immediate swing low, the day's low, which is there around 109.65, then we can consider the convergence area as a major resistance point, and we will also have the formation of a lower low, and on the higher side we have the formation of a lower high. So we can be then fairly confident of continuation of this trajectory, and we can try to get the entry point as close as possible to this convergence zone. So for us, the entry target should be closer to 110 level, and a stop loss can be kept little above these immediate swing highs. So a stop loss of 110.2 should be a safe bet, while going for the entry in the price band of 110.9 to 110. 109.9 to 110 is the 10 pips price band, and I think an entry taken anywhere in this band is going to optimize the entry. Our stop loss is going to be not much wide, stop loss of around 25-30 pips on the higher side, and on the lower side we can try to make the risk reward ratio at least 1 is to 2 or even better than that, and accordingly the target price should be kept closer to 109. Now let's see what's happening in the Dow Jones Industrial Average. This is the daily time frame chart, and here we have the bullish momentum again coming back in the Dow Jones after it declined for the last few days, and after making a low closer to 34,600. It has found buying momentum, and for the day it is trading well with gains of around 1 percentage point. Now, I think this correction is behind us, and in the remaining part of this week, we can expect the Dow to climb or continue to climb, and in course of time, again a new all-time high can be made, which has been a consistent story this year. The Dow has continued to make new all-time highs every few weeks, and this time around also after this correction it is likely to again go on to rise towards the new highs, and for that the trading opportunities can be looked into, and we have these support the base formation around the central pivot point of this month, which is there around 34,600. From there, we saw this sharp reversal. Now, in today's session, the gains have been muted so far, and it is consolidating and holding well about 35,000. I think we can rely on this bullish momentum to sustain at least for the next couple of days, and mostly we will have to rely on the lower time frame charting to get involved for a new trade, and we can expect a move toward this immediate resistance of the prior swing high. The first resistance of this month's pivot point series also around the same area, which had capped the gains in prior move, and this time around we can expect a move towards or even beyond that. But even if we have to trade conservatively, I think target price can be kept closer to this while we try to optimize the entry to make sure that we are not really taking the undue risk. And for that, if we get the move beyond these 200 SMA, then we will have far more confidence in our trade setup. And I think for now, we should avoid getting involved for a new trade, but watch out how the day closes for the Dow, and if it closes with these gains anywhere above these 200 SMA, then by the time we come back for trading tomorrow, we will have a lot more favorable formation, and Stop loss can be kept little below this 50 SMA, or this prior consolidation high can also be utilized as the immediate support. So we should be trying to get involved for a new entry as close as possible to the convergence of 50 and 100 SMA, and if the price momentum remains strong, I am expecting the 50 SMA to catch up on the higher side, and we can expect a crossover the 50 SMA crossing about 200 SMA by the time tomorrow's session start. So utilizing that, we can try to get involved for a new trade closer to the convergence area. So if we have to go for a new trade, the 35,000 level works out as a ideal zone, but we are almost 1 percentage point away from that price zone. So we will have to be really fortunate to get the correction and then do current consolidation before we can get the entry, and that's what we should be looking for, and we should be patient, and if we get the entry by tomorrow's session, then I think we will have a better chance of ending with good amount of profit on the higher side. Even now the momentum remains bullish, but as I said, the optimum entry is not at the market price. It's simply extends or enlarges our stop loss level, and we will have to take a lot more risk, as we will have to keep the stop loss closer to this immediate swing low, which is there around 34,700, and on the higher side the target can be kept closer to the immediate swing high, which is there around 35,700. So if we get the entry anywhere closer to 35,000, that is going to get us the risk reward ratio of 1:2. So that's my take looking at the current price formation of the Dow Jones Industrial Average. If any of you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. You can check out the Depository Analytics page for the further coverage of the market developments. To start trading, the JForex platform is at your service. We are also available on the Facebook. You can follow our Facebook page. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.